Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, host of the Mr. Mortgage Show, and I do put the fun in funding. So super excited to be with you. You, my friends, are in the right place if you want the information that you need to make better real estate and mortgage decisions for you and your family. And I know the news out there right now is super scary, and it's their job to scare you. It really is. I mean, the headlines are nuts. Everybody's, Chicken Little is running up and down the street yelling, the sky is falling. And if you've listened to this show for any period of time, you know that's not my belief. And we're going to give you the data to support that and encourage you along the way. So in addition to all of that, we are going to cover your questions. You are encouraged, as always, to shoot those questions to us. The Anytime hotline is 561-291-8569. That's 561-291-8569. Or visit the website, www.mr.mortgage, never a .com, just mr.mortgage, and you can submit your questions there. And also, too, the Facebook page is a lot of fun. We're getting some good interactions going on Facebook, and we're always dumping the data and the articles that we use during the show there, so you can read them for yourselves. And that you will find at the Mr. Mortgage Show on Facebook. So with all of that out of the way, we're going to dive right in. And I know it was another super interesting week in mortgage and real estate news. We've got the Federal Reserve trying to tame inflation and raising rates, and now they're saying they're not sure they're going to be able to soft land this thing. And I don't know about you, but I just don't have a lot of faith in the Fed Reserve at this point. I mean, they've waited too long to react, and now they're trying to overreact without causing a major recession. But I want to encourage you to do one thing, if anything, and that's read past the headlines. The headlines are super clickbaity right now. It's all doom and gloom, end of the world, and it's super frustrating, especially for me, because when I read these, I know the rest of the story, and it's driving me crazy. So I pulled one yesterday. This came out Friday from the National Mortgage Press, and that's not the National Enquirer. That's a real industry channel that distributes some good quality news. It's not, one-headed alien baby born to, virgin nun. These are real stories and real articles. And this one was titled Q1 2022 Sets New Foreclosure High. And the subheading was Foreclosure Activity Rose in All 50 States to Their Highest Numbers in 2 Years. And on the surface, right, that information, that headline, coupled with the local television news telling you everybody's priced out of the market. Everybody's running a series on that right now. And the financial news telling you, stock market was back up a little bit on Friday. But, for the most part, the last several weeks, it's been down. Rates are up. The Fed is going to kill inflation one way or another, and we may be the victims of this. So with all that news, if you hear that, foreclosures have surged to their highest level in 2 years, that's the headline. That's scary. Especially, I drove in this morning and saw, $4.60 gas. And that's the cash price. That's the new thing too, right? The price out on the billboard is the cash price. But my point is, if you take all that news that's already swimming around in your head and you're super frustrated, and it doesn't matter Democrat, Republican, who you voted for, this is all real life, everyday stuff that's super frustrating. And then you throw a headline in there like that, you think, oh my God, this is over. This is what everybody's been talking about. The market's going to crash. I want to dig deeper into this article, and I'm going to put this on the Facebook page. But this is my point when I say read past the headlines for the opportunity. And I'm not changing any of this data. You'll see it on the Facebook page. It goes on to say a total of 78,271 U.S. properties had a foreclosure filing during Q1, up 39% since the fourth quarter of 2021 and 132% year over year. Now, if you continue to read, the next sentence says March alone saw 333,333 properties, which is interesting that we're on that finite 3 number. But nonetheless, foreclosure filings up 29% from February and 181% year over year. So you read that and you think, my God, Mark, I've read past the headlines. Foreclosures have doubled. And I'm not going to continue to read. I'm going to skip through and get to the point of this message that I'm trying to share with you. There is one other thing. They say the states with the highest foreclosure rates were New Jersey. This is interesting. 1 in every 792 properties. Ohio, 1 in every 991. South Carolina, 1 in every 1,081. And Nevada, 1 in every 1,090. So what? 1 in 1,100 homes. So you start to see the point. It's not as scary as that headline led you to believe. But then you go farther into the article. Foreclosed properties had been in the foreclosure process for an average of 917 days. Let me read that again for the people in the back. 917 days they were in the foreclosure process. Folks, this is foreclosure activity that was started before the pandemic. That you remember, the moratoriums were put in place and banks couldn't foreclose. Landlords couldn't collect rent. Landlords couldn't evict. So all we're talking about here is housekeeping from 2.5, 3 years ago. This isn't as a result of high gas prices. This isn't a result of inflation. This is not a result of the Federal Reserve moving the interest rates from 3s to 5s. I mean, the mortgage rates as a result of the financial environment that we're in. None of this has anything to do with those other points. This is old foreclosure activity that was stalled during the pandemic. And take all those points into consideration. Nobody was going through foreclosure because of the moratorium. So naturally, now that we're out of that cycle, of course they're going to go up. There's a ton of housekeeping that has to be done in the foreclosure space. So I share all that just to encourage you to read past the headline. And here's where I find this article is super cool. And this should have been the headline. Delinquencies. Now, delinquency is the leading indicator of a foreclosure. That's when the person starts to get in trouble. They've missed a payment. They're late on payments. They may have a rolling 30, which means you missed January's payment, but then you made February's. Well, February's was applied to January, so you're still 30 days late. And people go through that cycle making that payment from that point forward, but that 30-day late rolls with them indefinitely. So delinquencies dropped in January to their lowest rate since 1999. And again, I'm going to read that one more time for anybody who didn't hear me. That article, the very same article that says Q1 2022 sets new foreclosure high. 3 pages into the article, delinquencies, which is new foreclosure activity or the leading indicator of it, dropped to their lowest level since January of 1999. So I share all that because the headlines are meant to get your attention. They're meant to scare you. They're meant to encourage you to click the headline or stay tuned through the commercial break with the news, and they're going to get to the rest of the story on the other side. That headline was completely misrepresenting the data in the article. The number one foreclosure state saw 1 in roughly 800 homes in foreclosure. And the new foreclosure activity has dropped to levels we have not seen since 1999. You couple that with everybody's equity position and the information that I share on that Facebook video about why I don't think we're in a housing bubble bursting scenario. And I believe for the time being that housing remains healthy. So if you have any questions regarding that, I encourage you to touch base with me offline. I would love to dive deep with you. But you hear that music, that means we're going to jump into a very short break. And just like the news that I mentioned on TV, we're going to encourage you to stick with us through this 2 minutes. On the other side of this break, we're going to cover your questions, and we're going to encourage you to send us those questions to 561-291-8569. That's 561-291-8569. We'll be back in 2 minutes. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back, and thank you for indulging me in that little rant. I hope you found that informative. And again, I encourage you to visit the Facebook page because all of that information is going to be there. So, long story short, I do not think that we have any near-term downside in real estate, certainly not because of the cost of money. So hopefully that shed a little bit of light on it, that article that I shared. And again, I just find it fascinating. Mortgage delinquencies are down, the lowest level since 99. So if that alone doesn't encourage you, there's a lot more data on there. So, and listen, I'm not a proponent of buying real estate or refinancing real estate for everyone. Don't mistake what I'm saying. But for a lot of people, it is a wise choice. And I just encourage you not to get scared into inactivity because it's super easy to convince yourself not to do something. It's hard to find the willpower to get into the gym, to not eat that second slice of pizza, or maybe skip that third beer at the barbecue. This is no different. It's scary even in the best of times. So any questions on that, I encourage you, give me a call. And the Anytime hotline is 561-291-8569. 561-291-8569. That rings here in the studio when Dom and I are doing the show, or it pushes to my office during the week, 561-291-8569. And speaking of people who have called the hotline during the week, I just wanted to give a quick shout out and recognize a couple people that I've talked to this week. I talked to Kim and Aaron, and they're buying a 4-unit property as an investment, and they're going to use it for their retirement. So super exciting for them. And she found it on her own. She bicycled up and down the streets, and the property was vacant, and they got a real estate agent to get on the phone and find the owner, and they put that deal together just based on their own ambition. So super excited for them. Glenn gave me a shout, and he was curious about buying after foreclosure. And yes, there are programs out there. Some immediately after foreclosure, all the way up to, you've heard it stays on your credit report for 7 years, but it doesn't mean that you have to wait 7 years to get a mortgage. There are a lot of loan programs out there for people who have had foreclosures, and I'm certainly happy to answer any questions that you might have around that. I talked to Andrew, super cool guy, really enjoyed speaking with him, and we talked about the lease option program that I shared last week. And I'm happy to deep dive that as well if you have additional questions. Diana called. She had questions regarding a debt consolidation loan. Mark actually called too. And we talked about, the break-even point and how to calculate all that. So just thank those two for giving me a call regarding that particular loan product. And then Tom and Judy, a couple, and Vincent, a single guy, they were curious to get more info about reverse mortgages. And we did a deep dive and kind of talked through the pros and cons of that. So thank you to all of you for calling. Oh, lastly, Wendy is buying her first rental property. So congratulations to all of you, and I do appreciate those calls. If you're not comfortable getting them on the air, do like those people did and give us a shout during the week, 561-291-8569. So, but as you know, the spirit of the show is answering your questions, and Dom has got some loaded up. I see him there, ready to rock and roll. So let me throw it over the board to the Dominator, the producer extraordinaire, and get some questions rolling.
All right, we have Zach just emailed us. Zach's asking, my bank said I can't use my crypto account as assets. Are there any other options for me?
Hey, Zach, that's a great question. And up until recently, no. A lot of lenders were afraid of crypto, but you heard me say up until recently. So there are programs. We actually are able to use your crypto as assets. And sometimes loan programs require you to have a certain amount of assets above and beyond what you're putting into the deal. So more than just your down payment and closing costs. And crypto certainly can be used for that. There's a multiplier applied to it. It's usually around 40 or 50% of the asset value. And the reason for that is, one, volatility, right? We all saw the wild swing in crypto this week. And anybody who ever doubted that, crypto can move quickly and wildly this week exposed that. So they discount it for the volatility, but they also discount it because most people are going to have a significant capital gains at one point in their crypto life. If they ever convert those to dollars and spend the US dollar, there is going to be a capital gain associated with that. So because of volatility and capital gains, they usually discount the value to 40 or 50% of the portfolio value to count for assets. And we've got a pretty cool loan program where we can even use it for income. I'll share a real quick story with you. And I might have shared it once before. I remember Dom and I were talking about this off the air one time because Dom is right in the wheelhouse age-wise of the crypto investor, and he's really forward-thinking. But we were talking about a couple that I had met that were in their late 20s, and they had accumulated a lot of crypto. I mean, they were crypto millionaires without any exaggeration. And they converted a portion of that into dollars for the down payment. But then we were able to apply what's called an asset depletion calculation. And this can be applied to any asset, to a retirement account, to a 401k. But we applied a multiplier to the remaining holdings to determine a monthly income. And they weren't required to sell it. They weren't required to withdraw any of the money or even convert it to a Tether coin. But they were able to use it as a monthly income based on that calculation. So this couple, without any dollars to speak of, were able to qualify and purchase a significant property. So super cool that, crypto is out there. It's becoming recognized as a legitimate currency. There definitely are some scary sides of it, but I just wanted to share that. Crypto can be used for assets, and in some cases, we can apply that model to it to use it for income as well. So, hey, Zach, I hope that helped and answered your question. I encourage you to get with us offline if you have additional questions. But speaking of additional questions, we'll see what Dom has for us.
Calvin called in asking, how long can I lock in a rate for? Is it possible to lock in the rate before I find a house?
Hey, Calvin, that's a great question. That's a wonderful question. In a rapidly ascending interest rate environment, it certainly makes sense to lock as early in the process as possible. So I'm going to answer the second half of your question first, because yes, you can lock it before you find a house. You can get your approval fully underwritten. It's what's called a TBD, meaning to be determined, right? The property is yet to be identified, a TBD approval. And with that TBD approval, you're ready to rock and roll pending the property being identified. So your rate lock can be typically up to 90 days with no charge, no upfront fees to you for a rate lock up to 90 days. If you want to go beyond 90 days, say you want to do a 6-month rate lock, some lenders have an extended rate lock program that requires an upfront fee, but you can go up to 360 months, with some programs with an upfront fee paid in advance. So, and you'll remember, we've talked about this before because I do remember this question coming up a few shows back. And if you don't close, you choose not to exercise the mortgage approval and you just stay in your rental or you move out of town, you do not get that fee refunded. And I don't know if you remember, but I kind of likened it to putting a bicycle on layaway at the sporting goods store. Matter of fact, I think I mentioned Walmart. And because that bike was taken out of inventory and could have been sold a number of times after you chose to take it out of inventory and put it on layaway, you don't get that fee back. And it's the same with money. Once you reserve that money for that extended period of time, in a typical lender scenario, in 360 months, they probably could have turned that money 3 times. So they've lost money by holding it for you and you not using it. And that's why there's an upfront fee associated with a rate lock of 6 months or longer. So hopefully that answers your question. Typically, a rate lock of 90 days requires no fee. We do them all the time. And then we also have a float down strategy. And I guess I should mention that too. Most of the extended rate locks have a one-time float down feature. So if you were to pay for a 1-year rate lock and rates were in the 5s or 6s, I don't know, let's just pick a magic number, 5.5, we'll split the difference. And suddenly 4 or 5 months out, rates dipped for whatever reason, you could exercise, most cases it's a one-time option, but you could exercise what's called a float down option and get the lower rate for the rest of the lock period. So we have a few float down strategies that we use too. So hopefully that helps. If you want to deep dive that off the air, I'm happy to answer your question in further detail. And you can use the Anytime hotline to get us off the air also. And that number is 561-291-8569. That's 561-291-8569. Visit us online at Mr.Mortgage. Just type in Mr.Mortgage or the Facebook page, The Mr. Mortgage Show. So you hear the music, that means we're going to run into a break. We're going to be right back in 2 minutes and we'll get to more of your questions. My name is Mark Eitel and this is The Mr. Mortgage Show. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. This is the Mr. Mortgage Show. Dom and I do this every weekend right here, same time, same station. So super happy that you're with us. We're going to continue to get your questions answered. And if you have questions, 561-291-8569 is the easiest way to get those to us. As they come in, Dom gets them on the air, and he's got one loaded up. So let's throw it over to him.
It's actually a text message that we got this time. They didn't include a name. Do you know of any creative financing options for first-time buyers? We want to buy, but it's difficult right now.
All right. That's a great question. And there are several options. So creative financing, first-time buyers. I'm going to need to know a little bit more, but I'm going to cover some of the challenges that I know first-time buyers have in general, and maybe that will answer your question. But if it doesn't, I encourage you to get a hold of us during the week at 561-291-8569. So creative financing for first-time home buyers can be something as simple as, if it's a down payment issue, you can use gift funds. So if a family member, even an employer can gift funds, they can assist with the down payment. If it is a situation where, actually, you know what, let me stay on that for a minute. There are a lot of grant programs that'll help with down payments also. And if you want to find a down payment assistance program, I encourage you to hit Google and type in your county and your state and then down payment assistance. As I mentioned many, many times before, those down payment assistance programs are often facilitated at a county level. So that's the easiest way to find that particular information. And then if it is a credit score issue, we talked about the lease option program last week, and that's really getting a lot of interest. You identify the property that you want, you pay a 1% to 2% deposit into escrow, and then you rent it back from the investor. So the investor buys it for cash. We're approved as a lender with this investor, and you have up to 36 months to get mortgage ready. Each month, a portion of your monthly payment goes towards your future down payment. So the lease option can help you if you've already found the dream house and you need time to get your credit score up. So if that's your issue, sometimes the lease option may help. And then if there's a friend or family member that would be willing to be a non-occupying co-borrower, that may help also, although we're using the lowest of the credit scores. So if your credit score doesn't even qualify you, that may be an issue, but that sometimes can work around that. We talked down payment, we talked credit score. If it's a debt to income ratio, that means it's the interest rate is now you're not qualifying because a larger portion of your monthly income is going to service the debt of the mortgage. Sometimes there are things like the seller can pay what's called a rate buy down for the buyer. So let's say you qualify at 4.5, but not at 5.5. And if the seller is willing to do it, they can buy your rate down to 4.5%. It's a fee, but it's a fee that someone else, in this case, the seller, would be paying to get your rate down. That's something I think you're going to hear more and more about as we move into a more balanced market where sellers are going to be more likely to give concessions. And concessions can be things like pay your closing costs, buy the rate down, those type of things. So those are certainly available. And then, as I just mentioned, if closing costs are the issue, then something as simple as a seller contribution may be the answer. But if none of those check the box for you and you have additional questions, give me a shout, 561-291-8569. That number pushes to the office when we're not on the air, and I'll be happy to walk you through your specific scenario. So speaking of questions, let's keep this train rolling and throw it back to Dom.
All right, Jason just sent us this one. Jason asks, rates are going up, stock market is going down, gas prices are going up, and now we can't buy baby formula. How is it possible that real estate is not going to crash?
Hey, Jason. Yeah, I know all those things are super frustrating, and I can kind of sense the frustration in your question. So it's not going to happen immediately. The market's not going to crash because of any of those reasons. As a matter of fact, those reasons kind of demonstrate why it's not going to crash. And I'm not saying something might not change significantly in the future, but for the moment, and let's use some of your examples, right? Gas prices are high. Why are gas prices high? Now, you could argue regulation, administration, all of that has something to do with it. But the biggest component of why gas prices are high, there's more demand than supply. The supply can't keep up with the demand, so prices are going up. And they're going to keep going up until people stop wanting to buy gas. Baby formula. I just saw it on the news this morning. They're enacting price gouging laws to prevent people from overcharging for baby formula. Why? Not because there's 30% more babies overnight, but there's 30% less inventory because of shipping issues. And there was a major baby formula factory. I didn't even realize this. That closed earlier this year for some issues, and they're allowing them to produce goods again. So supply and demand is what controls any market. I don't care if it's apples, houses, gas, baby formula. It doesn't matter what it is. Cryptocurrency. The only reason that's going up and down is because one day somebody wants to sell it. More people want to sell it than more people want to buy it. The price goes down. If more people want to buy it than want to sell it, the price goes up. Right now, today, as we sit here and do this show, and you ask this wonderful question, there's more demand than there is supply. More people want to buy, even at 5.5%, than want to sell. And as a matter of fact, a lot of people, and I'm going to encourage you to hit the Facebook page and watch that video, and I go into length on why I don't think the housing market is going to crash. Most people think because interest rates are going up, the market's going to teeter. Well, it may slow demand, but it may also slow supply. This is kind of the quiet part that nobody's saying out loud. If I'm sitting tight in my house and I've got a ton of equity, but I refinanced 2 years ago or 18 months ago, and I've got a super low interest rate, I got 2.9% 30-year fixed rate. Why do I want to sell right now? I certainly don't want to sell and buy into an overheated market and pay a higher interest rate for a higher valued property. I can't even move laterally right now and have it make sense. So I'm no longer a move-up buyer. If interest rates continue to move up, I think it may even temper some sellers from entering the market. Builders still can't get garage doors. They can't get appliances. They're still lacking the fixtures necessary to complete the homes for delivery. That's a supply side pressure. Interest rates alone will not control the supply and the demand. It may eventually temper the demand, but until the market becomes balanced, which it's nowhere near balanced right now, it's not going to tip the other way. Things are cooling. There's no question about it. I think you're going to see more seller concessions. I think sellers will be willing to use that buy down strategy that we mentioned on the last question. I think sellers may be willing to pay closing costs. Sellers may even be able to be willing to take less than asking price, but none of that means a bubble's going to burst. That means the market's going to temper, and appreciation is not going to be 20%. It might be 6% or 8%, and there'll be a deal here and there out there. You know, Mr. and Mrs. Johnson, who lived in the neighborhood for 50 years and paid $85,000 for their house that's now worth $700,000. If they die and the kids inherit that house, yeah, somebody might be able to talk them into selling it to them for $500,000. That's $200,000 under market or $300,000 under market. Is that an indication that the market's going down, or that somebody had a ton of equity and was willing to take less? So until supply and demand balance and then tip in the other direction, I don't think we're in a situation where a bubble bursting scenario exists. And, you know, the cost of money is designed to temper demand, which it may do, but it's not designed to fix any of the supply side issues, which are what it currently is driving the home value. So I throw that out there. There's some great videos on the Facebook page where I go into that topic in particular in length. So hit the Facebook page, The Mr. Mortgage Show on Facebook, and you'll be able to deep dive that. And if you'd like to talk with me off the air, I'd be happy to have a conversation with you. I'm open to any direction the conversation goes, and I'm certainly not biased to data. So 561-291-8569, get your questions on the air, and we will be right back after this short break. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. We are back. My name is Mark Eitel. This is the Mr. Mortgage Show, and you heard the man. You can get the questions that you have pending that are burning a hole in your mind. Shoot them to us to 561-291-8569, 561-291-8569, or visit us online at www.mr.mortgage. Actually, you don't even have to type in the www. I challenge you. Try this. Go up to your browser, Google, Chrome, whatever you're using. Or Chrome is Google, I guess. Anyway, type in Mr.Mortgage and see what happens. We will pop up. So you can always submit your questions to us there. But we are going to try to do a rapid round of questions. I saw a few stack up as I went a little long on the economy, but I think that warranted a detailed explanation. So let me throw it over to Dom for some questions.
Abby sent this question in just now. We're looking at a duplex as an investment property. Can you explain the investor loan you talk about? I think it's a DSCR loan.
Hey, Abby, that's a great question. It's actually called a DSCR loan. And what that means is debt service coverage ratio. And what a debt service coverage ratio is, it's the amount of income from a property against the amount of debt, or monthly debt rather, the monthly payments of that property, your principal, your interest, your taxes, insurance, if there's any HOA fees. You take every expense against the property and the income associated with it, and that's a ratio. So the cool thing is the DSCR loan that we talk about, which is awesome for first-time investors, with a down payment of, depending on credit score and program, 75 to 80% loan amount, so 20 to 25% down payment. We're only looking at the income from the property. So if the expenses of the property are $2,500 a month and the rent is $2,500 a month, we consider that cash flow neutral, and you can purchase that property. So basically add up all of the monthly expenses against the property, and you're looking for a 1-to-1 or better. Obviously, for you as an investor, as many times over that one that you can make that ratio work to your advantage makes more sense. So if it's a $5,000 income against a $2,500 expense, that's a 2-to-1 ratio, which is an awesome investment. So hopefully that answers your question, but look at the monthly debt and how the rental income covers that. And I encourage you to give us a shout if you need additional information. So let's keep this rolling.
Drew just called asking, how do I get more information about the lease option program?
Call me. That's the easiest way to do it, but I'll give you a snippet of it right now. So the lease option program that I'm pretty excited about is you find the property that you like. It can be on the market, listed with an agent. It can be a for sale by owner. You can knock on your neighbor's door and convince them to sell you their house. Or you could be renting the house and wanting to buy it from your landlord. Assuming the property meets the requirements, there is an inspection. They prefer single family homes instead of, basically fee simple is what they're looking for. If the condo or townhouse is fee simple, they'll also buy it. They buy it for cash and then they lease it back to you, and you have up to 36 months to buy it at a predetermined price. So if you buy it within 12 months, it's one price. Within 24 months, another, and 36 months, you're paying a portion of the appreciation to them. Most often, it's advantageous to you, though. Especially of late, there's been more appreciation in general. And then lastly, a portion of your monthly payment goes towards your future down payment. And if for some reason you decide that you don't want to buy the house after one of those increments in the lease, if you leave the property, you get the lion's share of that monthly escrow savings back. There is a small penalty, but happy to walk you through that in detail if you have questions. 561-291-8569. Drew, give me a shout during the week. Dom, what do we have?
Michelle sent us a text. Our credit scores aren't great, but we make decent money. Are there any loans we should be asking about? We're not first-time home buyers.
Hey, Michelle, that's a great question. So I'm going to slow this one down a little bit because FHA is a great loan program for somebody who may have a slightly lower credit score, maybe a little bit higher debt to income. But you mentioned in your question, you've got a slightly higher debt to income ratio. But you mentioned in your question, you have the income. So FHA. Now, I said FHA and everybody says, wait a minute, they're not first-time home buyers. FHA doesn't require you to be a first-time home buyer. You can use an FHA loan back to back. And just for clarification, the government guidelines determine first-time buyer by anybody who hasn't owned in the last 3 years. So even if that old, and where the confusion comes from is it used to be a guideline where even in the old days, if you hadn't owned in the last 36 months, you could still use that FHA program. So I encourage you, give us a shout. I'm happy to walk you through that scenario. But the FHA loan allows for a slightly lower credit score, a slightly higher debt to income ratio, which means more of your monthly expenses can eat into more of your income with an FHA loan than a traditional or what's called a conventional loan. And then the interest rate with the FHA loan is usually a little bit better than conventional anyway. So happy to talk you through that. Also, gift funds for down payment. There's a lot of advantages to that loan program. And in the past, people were shying away from it because sellers thought it was complicated or there were things that they were going to have to repair on the property. All misconceptions, but nonetheless, as the market is starting to balance, more and more people are going to look to that FHA product. So hopefully that answers your question. Not a first-time home buyer program anymore. FHA can do the trick for you. So let me throw it over to Dom and see what we have teed up question-wise.
Another text. This is from Samantha. We want to help our son buy a house, but we don't want to be on the mortgage. Do you have any suggestions?
Hey, Samantha, that's an awesome question. So again, I'm going to need a little bit more information because I need to know where your son needs help. If it's down payment and that's the only place he's lacking, then you can gift the funds to him. And that's awesome that you want to help him get into a home. So if it's a down payment issue that he needs help with, then you can provide gift funds. If his income isn't supporting him qualifying, but it's close, let's say he qualified at 4.5%, but he doesn't qualify at 5.5%. Some of those gift funds could be used to buy down the interest rate. So that's another way you could help without going on the loan. Outside of that, if he needs your income and your assets to help him qualify in a significant manner, then you would be classed as what's called a non-occupying co-borrower. However, that puts you fully responsible for the loan. Even though you're a co-borrower, you're each, fully responsible. So if for some reason he didn't make the payment, it would affect your credit. And I'm guessing by the tone of your question, that's your concern. Because one other option is if you're able to do this, you could buy the home in your name and lease option it back to him. and then gift him the equity. And there's no limit on equity gift. I mean, if you leased it to him for 3 years and the property doubled in value, you could gift him all of the equity. We've done that on many occasions where a child has made an arrangement with their parent, and the parent gifts them the equity position above the mortgage amount. And sometimes it's a couple $100,000. So you buying it outright, leasing it to him, and then him purchasing it with a gift of equity at a later date may be an option. I'm not sure if that helps, but if you have additional questions on that, just give us a shout during the week, 561-291-8567. Do we have anything else teed up? I'll try to squeeze one more in.
Brian sent this one. I run a dive charter boat and get paid $10.99 and a good amount of cash tips. I don't technically own the business. Can I use a bank statement program you talk about?
Brian?
Yes.
Hey, Brian. Yes, you can. So we've had a situation like this very recently, and you can absolutely use the bank statement loan. And this particular gentleman ran a parasail boat, and we used his captain's license to show that he was self-employed. And then he also made quite a lot of cash income taking photographs and videos of the people when they were up in the air. So we use that cash income also by using the bank statement loan as an alternative income verification program. So yes, bank statements, even if you don't own the business, you're getting a 1099. It sounds a lot like the captain of the parasail boat. And in that instance, I know it'll work because we did it for him. So if you have more questions about that, give us a shout during the week. 561-291-8569 is the Anytime hotline. That'll get your questions on the air now, but that also pushes to my office during the week. We will be right back after this short break. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. Woo, that was a rapid round of questions. So yes, we ended that up with Brian, the boat captain, who's a 1099 employee, wanting to know if he can use the self-employed program with bank statements. And that applies to anybody who is receiving 1099 income and then significantly writing off that income on their taxes. So the bank statement program can be utilized outside of, strictly business owners. So we use it a lot for salespeople, for real estate agents. I don't know how many agents out there are listening to the show, but agents, that's a great program for anybody who is commissioned or, receives their income untaxed, and then it gets filtered through their tax return. So hopefully that answered your question. And speaking of questions, I'm going to throw it over to Dom and see if we have anything else teed up.
We do. Melanie just called with this one. I'm an agent. I have a client in contract for a 5-unit property under contract. There are 2 duplexes and a house. Originally, his lender said he was approved with 5% down. Now they're saying they can't do the deal at all. Do you have a program that may work?
Melanie, wow. I hear the Twilight Zone music playing because I just said I don't know how many agents listen to the show. So, hey, thanks for the question, and thank you so much for listening. But this is a little tricky. So it sounds to me, and I don't, you know me. Well, you don't know me, but if you listen to the show, you know that I don't make it a habit of ever talking badly about any particular company, bank, or broker. But it sounds to me like the broker in this instance kind of missed this from the beginning, a kind of a swing and a miss, because the 5% program typically applies to a 1 to 4 unit property where you're going to occupy one of the 4 as your primary. And then you can go down as low as a 3.5% down payment. So because you said, if I heard the question correctly, that the original lender said 5% down would work, I'm thinking that they were probably trying to put him into the 1 to 4 category and missed the fact that it was a 5 unit. Because once it goes to a 5 unit, it goes into a different loan product category. So it's going to be either classed as small commercial or a multifamily that's outside of the norm, because there's 2 duplexes and a single family. And I'm going to need a lot more information if it's all deeded on one property, if it's all legal and it wasn't a converted duplex. We need to kind of sort all that out. But just on the surface, I'm guessing that this is most likely going to require a 20 to 25% down payment. And then assuming that works for him, yes, there are programs available. Some of them have loan limits. It might require a minimum of a $500,000 loan, but it's designed for, the slightly not outside of the box, because there's a lot of 6-unit buildings out there, but it's not an apartment building, but it's not a fourplex, and you're kind of in that middle ground. But typically you're going to be looking at a 20 to 25% down payment and a minimum loan amount of $500,000. And if it meets those parameters, then yes, there are programs available. So hopefully that helps. I know we had a lot of really good questions so far, and I want to thank everybody for shooting them to us. And thanks again for indulging that opening segment, because I hope you walk away from this show every week that we do it. Our goal is to give you the information that you need to make better real estate and mortgage decisions for you and your family. And as always, I encourage you, if you have those questions, to call us 561-291-8569, 561-291-8569. And Dom and I will get your questions answered when we're here in the studio. We'll get you on the air. And if not, that pushes to my office during the week, 561-291-8569. Or visit the website, Mr.Mortgage. That's www.mr.mortgage. And thank everybody who's hit the Facebook page. I'm loving it. Go to Facebook and search The Mr. Mortgage Show. You'll find all of the data that we use each week in the show there. I'm putting up some resourceful articles and videos and encourage your interaction there too. So you hear the music, that means we're wrapped for another week. Wow, that was fast. I really... time goes by quick when we're sitting in this chair, but hopefully we've given you some good info, and we encourage you to reach out during the week. Otherwise, we will be here, same time, same station next week. Again, my name is Mark Eitel, and this is the Mr. Mortgage Show.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.